The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, this 12th day of December, 12-12-13. 12-12-14, and my pleasure to be here Monday through Friday on market days. Just realized Friday today, gosh, this week went quickly. It was just last Friday that I mentioned to our two callers from Boston about that tango concert, which my wife and I landed up at the last minute going to, and it was great. I'm just thinking of the rhythm because before I came on, there was a great commercial that was played by Al, our great engineer at TFNN, and it had da-da-da-da-da, beautiful things, and it was a waltz, and I thought, gee, there aren't too many pieces of music that just, as they start, you just know immediately it's got a bounce, it's got certain characteristic. Same with the tango. However, back to our market. Well, thank you to Steve and to Tom and Dow for 3 great hours. Right now, what we have is Dow down 177. I still remain in the sell mode in the Dow, and my subscribers, we are short the Dow, and at this particular point, we're getting to the 17,420 to the 17,380 area, because if that goes, that 17,200 is going to be really important. 17,333 is the 120-minute target on the downside, and it's a 200-period exponential moving average. Now, we made a peak F-top in the Dow. Today's Technical Friday. I'm going to get into some of the technicals. But most importantly, what I'd like to talk about is the characteristic of the volatility index. It is unrelenting. It has not given up. The VIX right now is at 20.64. Even during the session yesterday, we had a trade on for my subscribers, which, if you followed my directions, you made some really nice money. But if you followed my instructions on how to play it and you used a little bit of your own ingenuity, which a number of my subscribers did, they managed to squeeze out an over 50% gain in just a couple of days. It was just fabulous. And I have to congratulate them because they followed the Chapman Wave methodology. We were expecting, let me just go to this right now, dollar VIX. We were expecting, after that peak C that was made in the 120-minute chart and the VIX index, that there would be a pullback. I should have used the 9-period exponential moving average and the 200-period moving average, but you've got good gains. You don't want to give them up. The volatility index can move so quickly. You can see a 12% gain turn to an 8% loss in a blink of an eye. So I didn't want to give that up. So we did that, and we were not technically able to play the upside because it moved down a little bit too much. I had to do a calculation that was not based, it was based on emotion, it was based on a whole bunch of things. If I did it purely on the technicals, I didn't really want the price to go too low down to give up too much of the percentage gains. So I made it fairly narrow, and then those who played, basically what we were looking at, because there was a single leg A up, I talk about the single leg A syndrome, sometimes these single leg A's give it up really quickly. But if they turn out to be legitimate, in other words, you do pull back, you can even start a brand new buy mode like in the daily. The daily is in leg A, going from 1153 to double to 21, almost double, 2102 already. If that continues and there's a pullback, even if it goes to the 1657 9-period moving average on the VIX and then starts up again, well, you can really push much, much higher. But I felt that we would do something, and then I'd said if you go past 18.92 on the volatility index for leg D, just raise your stop and you'll be okay. Now, here's another thing. I wanted to get back in, but after such a spectacular move, you remember back on when I was in Australia, back on the, where was I? October the 15th. Let me find the chart for you. Oh, I just don't go back far enough. Well, I'll go back here. On October the 15th, I had to do this from Australia. Well, the VIX went to 31.06, made a peak F top because the next day it pulled back. And look how quickly it went from 31. Within 3 days, it was down at 18. That is huge, almost, what is it, about a 45%, 46% decline. And an island reversal. So I did not want to see, because my instinct was to say, hey, we've been here before. This is a very, if you look at the weekly chart of the volatility index, remember Technical Friday, I'm going to get into the technicals, and I'm doing that. You pull back from the weekly chart very quickly once you make that spike to the top. In this case, C. Usually it's a B or an A. And the Bs have been pulling back really sharply. So this is going to be very interesting. Why? Because it's Friday. And on the weekly chart, for the first time, not only are we above the 16.80 level, we're not even 2 hours into the session. Anything can happen from here on out. But as it stands, there's tremendous selling in the market. It is... All right, let me just go through this slowly. What's happening is, the reason why I want you to get a plethora of shorts out is because, look, I can go through every one. The Dow, INDU, made a peak... dollar, INDU, made a peak G, an unusual G. But remember, we were looking for a G. That's why we went short there. Peak G at 17,991. We actually had gone short just a little before. But so we went short, and the reason why I wanted to be a little bit more comfortable with the short is because, and by adding to other short positions, is because when we are looking at the Chapman wave inside track resistance zone, we were right in there, bumping up against it, and that's where you get your biggest turns to the downside. Not necessarily the biggest turns in terms of price to the downside, but your biggest turns in terms of percentage odds. Let's put it that way. All right, look at the S&P. And now you can see we're under 17,500, which is the 9-period moving average in the weekly. But the day is young. Anything can happen by the end of the day. This is an extremely volatile, politically and technically oriented market. We made a peak E-top at 2,079.47. Let me just type that in. 2,000, what did I say? 79. Okay. And in the S&P is now under the 2027 9-period exponential moving average, but there is a very good chance that you're going to go from the top part of the channel to the bottom part of this channel. And see right there? And that could take you to the low 2000s. Meantime, back at the ranch, the upside looks very difficult at this point with a 2022-ish area, very strong resistance, and then 2035. I will go through different things. Yep, questions in the den. Let me do this because I keep promising Technical Friday there's certain things I would do. Then I don't do it. And I'm going to do it right now. This is a leg C to the downside in the QQQ series. Holding quite well considering everything. But look, the up channel inside track, the Chapman wave inside track repellent zone, pop, goes to a D/A, pulls back. 102.52 is the support in the QQQ series, and at this particular time, it is down 38 cents at 103.40, but it did make a low today of 102.72, so we're going to be watching that real closely. The resistance is at 104.24, the 9-period exponential moving average. Let's go on to the IWM. IWM was leading to the downside. It was leading to the upside. Now it's down 0.91, down 0.78%. It's less than both the Dow and the S&P in percentage terms. Because, why? You remember the pattern that we were looking at that I said, this double U cup formation says that there's going to be tremendous resistance between 118 and 119, and we should pull back. So this is the third pullback, except there's one big difference. Look at the technicals. The rally was unsubstantiated by the technicals. MACD was already declining. Stochastic did not even get close to the previous highs. Every test of the 118s and the IWM, the Russell 2000 iShares, has seen lower stochastic. When the on-balance volume finally joins in, which it hasn't done yet, it could drag this down to 113.18, which is the 200-period exponential moving average resistance at 116.36. Now we're going to go to the NYA.X. Remember, Larry was talking about this the other day. Failing, he said. Well, it made a peak G, what I call a smooth peak G in my CD introducing the Chapman wave methodology. I discussed this very technique where it goes to an F, and then it's almost imperceptible. Within 3 bars, you make a leg G, and that G acts as if it was an F, except sometimes it uses up a little bit of energy, so you don't get the power that you would have got at a peak F to the downside. We'll see, because now it's under the New York Stock Exchange is at 10.582, down 107, down 1%, and under the 200-period exponential moving average in the daily, and the weekly chart failed. This is a pattern that I saw yesterday and I forgot to talk about. Now, this is a very important pattern that I'm looking at. Let me just show you what I'm looking at here. It's that cup formation that turns, the V-shaped formation that turns into an arch formation failure. And I'm going to be watching this, so closely. Why? Because it failed to go to 11,107. It went to 11,068. And that's a very familiar pattern. It says, be careful. This is the pattern that can take you back down to very important support. I hate to say it, but that support is the October the 15th support at 98.86. Now, I've been talking about weekly charts and suggesting that there was a chance that we do not go down to the October lows. In fact, we make a low before that and then start a move to the upside. I might have to revise that, and I'll tell you why. There's a particular index that absolutely nobody ever talks about. I don't talk about it either, because I used to talk about it all the time. It was just, it was a trading vehicle for me. It was great. But it just went out of fashion. And this is the XMI, which has a high of 1920.30 back on the week of the 19th of September. And then it went to 1915.40 in November. And then in December, it went to 1917.68, failing. And that creates a rectangle formation. Show it to you right here. Oh, break coming up. All right, as the break's coming up, I'll finish up this little drawing here. Gold is up 23 cents. No, am I right? No, gold is not up 20. Gold is down 6 at 11.56. Silver is down. Bonds are up a point, and I will be back. A dollar is down. I'll be back right after these.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
To do here in that hour, I hope I don't forget, but in case I forget, don't you forget that straight after my show, you got Nico and Paige. Great programming, living a primal lifestyle. Whoa. Really worth listening to. So let's go to the XMI. So the XMI weekly chart has this rectangle formation. Within that, there is the arch formation. Within the arch formation, what you would see is that it's really important that at about the 50% mark at 1832, it's at 1836 right now, if it cracks that number, then there's a chance of retesting this Chapman wave Roman candle of October the 17th. So I wanted to get that out of the way. Now a couple of things, a little stuff that had come up earlier on. Steve was talking about mentors. He was talking about trying to elevate your game, and he mentioned if he wasn't sure if I was listening. I was listening, of course, but he said if Basil's playing tennis, he probably likes to play with stronger players so that he can elevate the game. Absolutely, but it's the other way around, actually, because what I tend to do is during the winter or certain parts of the year, there will be someone that would like very much to play with me, a good friend. Well, I like playing with good friends. It's social, it's fun. I just want the exercise, as long as I'm also playing other very good people in between to be able to continue to elevate my game. But what is most important for me, for instance, maybe 4 years ago, I can't remember, 4 or 5 years ago, a very good friend of mine had mentioned that he plays tennis. I said, oh, great. So, and he would happen to be a member of the same winter club that I'm a member of. So, you know what, if you have time, we'll play. So we played, and he was okay, but he was really not very good. Well, let me be polite. He was lousy. But I said to him, I said, I'm not going to come down to your level. You're going to come up to my level. I'm going to serve my service, that very fast service, as hard as I can. And you'll learn to get it back. You'll learn just to get the racket in the way, like even very good players do, and it'll bounce back and probably fool me when it comes back. And over the last years, he's just gotten better and better, and I haven't gotten worse because I did not come down to his game. I said, I'm going to play as hard as I can, There is no sympathy, no nothing. It'll be depressing for you at times. And, he wins a lot of games now. That's the way it is. I love that. And, of course, I make sure that I do play players that are better than me, even though I'm theoretically just supposed to have friendly games. I have friendly games, but I like to win. So that's it. So, yes, absolutely. And you elevate your game. That's why the den is such a great thing, because you'll learn how some of the best players are handling their trades and what they're doing when they explain it. Okay, so now let me just check questions in the den. I do want to go to questions. Mike says, Basil, you always elevate all of our games. I hope so, Mike. Believe me, I learned. The one thing I learned years and years ago, and one of the reasons why I've always loved teaching, and why, although I don't teach clarinet anymore, I was a professional clarinetist and educator and conductor. I miss it because teaching, when you teach, you learn. And the more you teach, the more you'll learn. It's just real simple. So, very good, Bill. Tennis is a racket. And you spelled it correctly. Excellent. So, okay, let's get back to the business of the market. There's really not much to say. The trend has changed, at least for now. We're in a downtrend, and most of the stocks are going to have a problem. So, this is what I want you to do. I was discussing the volatility index, but I need to just go back to it because I didn't want to skip some things. So let me just go back to the VIX and explain to you that on a weekly basis, this is the quickest, and I expected this earlier on, that in the 5th to 6th week, 1, 2, 3, 4, 5, 6, 7, usually it's 6, but in this case it was the 8th week. That's where the VIX starts to climb. And very often it just becomes a U with a smaller right side height. Then it comes back down, retests, and makes a larger U or W formation. And that's the one that goes to the spiral up in the 20s. Now, all of a sudden, what have we got? Within 8 weeks, we've got the second time we're in the 21 area. Hey, look at the monthly chart, and look how important this is. Look at the reason why I've spoken about the VIX index for 5, 6 years, 7 years, how long? Just forever. I've spoken about the volatility index. Why? Because it is selling pressure. When it is going up, think of it like bonds. When bonds go higher, the yield goes down. Well, when the VIX goes up, the market goes down. Make it as simple as you can. Look where the VIX is. If it closes today up in this 20 area, whew, that's going to be a signal to say, be careful. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everybody, Basil Chapman. We're back, and we're going to go to Mark in Fort Collins. Hi Mark, how are you?
Hey Basil, how's it going today?
It's going well. If you don't mind, I'm bound to forget this. I was asked earlier on about 2 stocks, and I just want to mention them as we're going to go to your stock. So give me 1 second.
No problem.
We've got EWG, which is the iShares, the German ETF. Question was, is this a good time to short it? And all I would say is, from the perspective that I have, it's a little late in terms of risk reward, but it's trading at 27.84. I think at some point in the next 3 days it's going to fill the gap in the 27.30s, and then if it does that, it should go down to 26.50. That's what I wanted to say. With 26.36 is a 200-period moving average in the weekly chart, and the resistance at this particular point is at 28.27. And the other one was the EW. I want to do it quickly. EW. All right, I've forgotten already what it was. EW something. All right, I'll have to find it. It was EW. No, I can't find it. So I just wanted to get that. There were 2 of them, and one was better than the other, and I'll try to do it during the break if I can find it. And let's go to your question. You have a question, Mark. What is it?
I just want to congratulate you on your calls on the VIX. I used your call to buy the VXX calls, which ended up being a wonderful day to 2-day trade. And if you might want to keep an eye on that. It's very easy there's a pretty good liquidity on that, and you can buy the calls on the puts on the VXX. And, man, when that runs, it really runs. So
yes, it does. And, in fact, thanks for reminding me again. So let me make a note of it. This is the VXX. Speed was the issue. You saw that this is actually now the 6th, or either the 6th or the 7th session this week out of 5 days that we've had a 200-point up and down move, like a yo-yo. So the speed has been part of that, and I do appreciate you mentioning it, and I'm thrilled. I've had a number of people say, we believed in the Chapman wave. We believed that there will be a leg D, and we stayed with the trade. And as I say, for my subscribers, technically, we got a nice profit, but it was nothing like the 50% gain. Some people made even more than that, and I do appreciate that. And you know what? It's a shock to me to know that today the volatility index, the VIX, is still up at these highs. It's just telling me that there is intense selling. I just don't know what's going to happen when it finally lets go and the VIX drops maybe 35 to 40%. Will that be the turnaround, or is this now some kind of an omen, some kind of a heads up to say, hey, take this decline seriously? I'm actually starting to I started off taking it seriously. Then I thought maybe there could be a better balance. But failing like this says to me, wow, be very careful, especially if the VIX remains high. Anyway, you'd like to look at?
Yeah, I've been nibbling in the last day, a little bit today and a little bit yesterday, on some USO calls for January, and I'm wondering if I'm catching a falling knife here. But you know, I'm not. It's doing fine. I'm not down too much. I'm looking at a long-term. I talked to Tom a little bit about this earlier in the week. I'm looking at a long-term weekly on the USO and the monthly, and it's come back and it's under the left side low from way back in February of 2009. And I'm wondering what your thoughts are. I know you talked a little bit about a potential bounce in like the U.S. UCO or a decline in the UCO. Or
yeah, so this is what I've been doing. I've been doing quite a bit of work over the last couple of days in the SCO, and I showed for subscribers today. I wasn't actually going to show it, but it is going to be such a difficult trade for anybody. I'm prepared to show it because timing it might be not one timing. You might have to time it 2 to 3 times to get it right. I'm showing the SCO right here. That I took out the MACD and stochastic. What I wanted to show is that in Elliott wave, which has absolutely nothing to do with the Chapman wave except for one thing. If you do the Chapman wave, you will often find that the Chapman wave gives you the timing for the Elliott wave big reversals. It happens often enough that people email me to say that that's what happened, but at the same time, I really only use Elliott wave at certain points. I'm looking at it most of the time, but I don't actually use it except in a case like this, where I'm looking at the 120-minute chart of the SCO, which is the ProShares Ultra Short Bloomberg crude oil chart. And what I'm looking at is from the low that was made on the 24th, right at 40.76. There was a rally that went in the Chapman wave to peak ABCD, and I call that Elliott wave 1. And then it comes down, Elliott wave 2, starts a brand new Chapman wave buy mode. It goes peak A, B, C, D, stops, doesn't make an instant restart, although it is really close to it, but I do have to put it up arrows and down arrows instead of the plus sign and the circle. And we've started a brand new buy mode, and it goes peak A, B. B starts to pull back, takes time and a bit of price. I call that wave 3. And then wave 4 comes down, just one bar, goes sideways, and then breaks out and starts C, and then it goes to D. Yesterday's close at 64.21, and then just before the close it went to 64.17, and now it spikes up, gaps up, and goes on a Friday to leg E, and it goes all the way to 67, what did it go to? 67.47. And what I said to subscribers is I also have a Fibonacci extension that goes to a 161.8. I don't even think I called it a 161.8. And that is at 68, 67 to 68. So all it's saying, and I don't even yet have a signal to say that there should be a turn down. But what it does say is that in Elliott wave 5, which at this particular point, just by eye, I don't want to do it by points, I don't want to take the time, but by eye, it's either very close to or about to break Elliott wave 1. Now, sometimes in 5, you can get an extension that takes you higher in 5. Sometimes it's just, and this is perfect because sometimes what you get, let me just show a chart for the moment if I can find one. Let me just see if I can grab something, and hopefully it's got it right there. Yeah, sometimes you can get the stalk leg formation, and that stalk body goes just a little higher, which would be Elliott wave 5, but it's the one that confuses people in Elliott wave the most. Why? Because it's kind of a flat, or it's a short, very short leg 5, which is not what it should be. But I don't care, because in my work it's giving signals. So now what's really important about this, let me go back to that chart, and let me just have a drink of water. What I'm looking, let me just show, if anyone looking at Tiger TV, that is the Tiger Cup that I've still got. The one that says Basil, a special Tiger Cup that was sent out by TFNN many years ago at Christmas time, and I've still got the cup. So what we're looking at is just a chance that we're getting to an extension. I would love if I could have a news outlet that would give me the count on the word oil or crude oil. I would not be surprised if we are in leg E on a shorter-term basis, very close to a peak F in the word count. But I think we are very close to a pretty decent bounce attempt, which means that you might have to bounce, make an H pattern, pull back, and then start another move that'll surprise everyone as crude oil suddenly rallies. That's just my thinking, but that would only be in the shorter term. Why? Because if you look at the longer term charts, and now I'm going to pick out the crude oil, CL, I've just a continuous contract, you'll see that this is the leg that is broken down, and as I said last week, it means that this coming week you need to see some kind of a doji turnaround candle, and the following week you need to break to the upside, and then you can have a bounce from the, let's say you go back above 67, was it? Above 63, 65, and you could even bounce to 65 or even 67 over a period of 3 to 5 weeks. That's what I'd be expecting. Big anticipation. If you're in a waterfall cascade to the downside, look at the doji candle from last week, look at the candle today. If this is a measured move, the candle from the week before says if it's a measured move, you're still got to move in crude oil on the continuous contract to about the 56 level. So you've started a position. I think that's fine to start it. I'd still be very strict. I would prefer at this point to say, now that you've got a little nibble, don't get carried away. We used to have a GG in the den used to say, catching a falling knife, I will sell you the steel gloves to catch the metal knife, because you never know where it's going to stop on the downside. So all I'm saying is that I'm getting ready. Maybe it'll be a trade. When it is a trade, I think it's going to be a trade that has a nice percentage, but don't be surprised if it's just a shorter-term trade. Crude oil looks like it has been damaged enough to go down and stay down for quite a while, regardless of bounce, which will be the H pattern that will fail and go to lower lows at some point. So it's a starter position. I know that you said that, but we are real close to at least an attempt. So that attempt could be 2 points away. That's a big move. But I think you are very close to something like it. And as I said, 68.02, well, it's not 100% exact. Somewhere in the 68s, I think there might be at least an attempt to turn around. But if it does become wave 5 and leg E in the 120-minute chart, you've still got to think that in SCO, in the daily chart, this is still leg D, and the MACD is still very strong. Look at that. And the on-balance volume is at 94%. So that would explain why I'm thinking there would be a cup formation and retests of the highs in the SCO, which is 200% short. I believe it's 200. I'm not sure if it's 300 or 200% short crude oil. And at the same time, if you're looking at crude oil itself, that would be the H pattern. So that's what I'd be looking at. Hope it helps you.
Yes, very much. Thank you, Basil.
Thank you very much, and thank you for the compliment. I do appreciate that, and congratulations on a great trade. Let's go to Brent and Martinez. Hi, Brent. How are you?
I'm doing wonderful, Basil. How about yourself?
I'm doing well, thank you. You'd like to look at?
I have several stocks that I have in a watch list with alerts.
Yes.
And one of them that it's kind of funny because it hit the round number perfect, but I had it at If it were to hit 85 or below, and it hit 85 exactly at Stratasys, SSYS.
SSYS on the 9th of December, it hit it exactly. Typed it in here, 85 round number. Now, the reason why I did not put it on my buy list, look at the stochastic. Remember, I was just talking about crude oil up at the 97% level. That's fantastically positive when the stochastic holds in the upper 90s. When the stochastic holds in the lower single digits at 8% like this, it's showing no strength whatsoever. You're going to have to wait for some kind of catalyst, some kind of trigger to push it higher. So do you have a position at all?
I don't at all. I'm
going to suggest you hold off, because the weekly chart is still very, very weak. But when there is a bounce in the market, this should at least have a bit of a bounce. I'm going to suggest I'll have another look at it on Monday and Tuesday, but my thinking right now is that it's really not the place to be. The monthly chart is not good, and the weekly chart is not good. Yes, on the daily chart, you had absolutely every right to think, and it did. It went from 85 to 91, 6 points. That's a fabulous move. But look what happened. It's come right back down. I would just hold off for now. You really want the market to be helping you with SSYS. So I hope that helps you, Brent.
It does. Thank you very much, Basil. You take care. Have a nice weekend.
Yes, you too. Thank you for calling. Let's go to John in Philly. Hi, John. How are you?
Basil, thanks so much for taking the call.
My pleasure.
Basil, like you, I am with you, and observe on the various stock indices, the Dow, the NYA, the pressures here, and the need to ask the question, is this the middle of something much more severe, of course? Now, having said all that, can you please pull up either the NDX or the futures underlying the NDX, which are NQH5 or NQZ4? And, Basil, tell me why this is not a falling axe where the bottom already occurred this morning.
Oh, hey, that's a great question. So, folks, we're looking at the NQH15. I wonder if you wouldn't mind, John, I know that more people would be looking at the QQQ series. I'd like to be as general as I can, since not that many people will be looking at the NQ and it's the same pattern. So what I'm going to do is I'm going to say to you two things. One is you could draw in the chart pattern that I always look at, which is that flag pattern, or in my case I usually look at it as a falling axe, and that would be like this right here and would extend down. So you've got an expanding wedge. That's really what I'd be looking at. Now, what I'd be looking at are two things. One is the MACD is the distance, the beta between the fast-moving average and the slow-moving average, very wide in the MACD, and the stochastic is plunging. It's at 33%. So the falling axe means absolutely nothing until you go into the top part. So if the QQQ series, instead of being at the lower part, was at 105.04, I'd say, ho-ho, we've got a potential. Hold on, we've got a break coming up. I'll finish this thought, and if Mike can hold on, we will talk about the VIX when we get back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We're back, and I just answered in the Dan the question about the E. It was the EWZ, which is Brazil. Brazil looks very weak. Almost looks like an oil chart. Looks like it's going from 35 down to the 29, 26 area. So let's go back to John and Philly. We've got the QQQ series. Now, a couple of things. One is in the QQQ series, the pattern that I call the falling axe in the Chapman Wave methodology, the CD book, the falling axe actually happens to be chapter 24, starts at slide 391. And basically what it talks about is an expanding wedge formation that from a top, a DEF top in any time frame, pulls back and forms lower highs and much lower lows. When it goes back to the top, what you would look for is that when it crosses on the upside, the downtrend line, and I'm going to just try to do it as carefully as I can here, like that and like that. So the downtrend line would be at 104, 105. Let's say it closes at 105 in the next 3 to 5 sessions. That would say to me, aha, now you can look at each left side peak as upside potential, because there's a good chance that you're going to go back to try for the upper level of 105.78 of the 4th of December and then 106.25 of the 28th of November. So that's the only way that I would start to consider, but you can put it in. But it also has the failure pattern now of turning the downtrend line as the support level you got to watch, and that makes 102.50 to 102 really important support next week on the downside. So I hope that answers your question, John.
Very thorough, Basil. Thanks so much. You have a good day.
You too. Thank you. Let's go to Mike in Thailand. Hi, Mike. How are you?
Hi, Basil. How's it going?
Well, thank you. So just before we run out of time, you got a question on the VIX?
Yeah, you know what? I wanted to ask you, and I know we're going to run out of time, but we'll start with the VIX. I just wanted to point out an observation and hear your feedback.
Yes.
I noticed that with the VIX, if you put it on a monthly, a weekly, I'm sorry.
I got on a weekly.
Going over a 3-year period.
Yep,
right?
I got it right here.
I see your chart. I got to look at mine, though. I'm more familiar with mine. This is when all the turmoil, I notice, hits the fan.
Oh, absolutely. And each one. You got the Greek crisis, the bank crisis, the funding crisis. Yep, absolutely.
Yeah, well, hang on, Basil. When it's above the MA 200, that's when all the indecision and chaos really cascades. And this is what happened last October.
Absolutely.
It sustained above that 200-day moving average.
Correct.
Now we're back over that. Okay.
Yes, there's a big difference. Let me just finish your thought, and then I'll continue it on Monday. But the whole thing is, if we close sharply above the 200-period moving average, it'll be the first time that we've closed sharply above since December of exactly a year ago, 12/12, 2 years ago of 12/12, and of 6/12, and each one of those in the very next week collapsed. The VIX collapsed, and there was a climax to the market. So this is a little bit different because of the size of this move. This matches the move that occurred the week of October the 10th, and then you remember that October the 15th was the turnaround date. So I'm going to be watching this really closely. So, and then there's a question in the dent: can we get to peak D? Yes, you got to peak D at 48 round number high back in August of 2011. So if you don't mind, I know we're going to run out of time. We're going to go to Nico and Paige, but how about we continue this conversation next week, okay?
You know, I got a few questions I'm going to ask you in the den. Is that okay?
You ask it in the den, and I'll cover it on Monday, okay? Thank you very much for calling. Hey, folks, have a great weekend. Dow's down 222. Ooh, watch out there. And I will be back on Monday. Check out my opening call. I think it was a good time to do it. Thank you for being here.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.